What happens to insurance when no one is driving the car anymore? Welcome to the world of fully autonomous vehicles, where artificial intelligence, sensors, and software take the wheel. And while that might sound like a futuristic dream, it's already reshaping the foundation of how insurance works. So let's break down what insurance could look like in a world of driverless cars. First, in a traditional car insurance policy, coverage is built around human behavior. How fast you drive, how often you brake, whether you've had accidents before. But in a fully autonomous world, the driver disappears from the equation. That means the liability shifts. Instead of insuring individual drivers, insurers will focus more on insuring the technology, things like the software, the sensors, and the manufacturers that build these systems. In this future, accidents will still happen, but the cause will be different. A malfunctioning algorithm, a failed sensor, or a breakdown in vehicle-to-vehicle communication could be the root cause, and when that happens, claims could look more like product liability cases than traditional auto insurance. So what changes? One major shift is that manufacturers, developers, and tech vendors will need broader and more customized liability coverage. These might include policies covering software failure, cybersecurity breaches, and system performance in unpredictable weather or environments. Fleet owners of autonomous delivery vehicles or robo-taxis will likely carry commercial auto or general liability policies. And these policies could be bundled with maintenance contracts, data sharing agreements, and real-time monitoring systems. Some experts believe we'll move toward usage-based or mileage-based insurance, especially for shared mobility platforms. And for personal owners of autonomous vehicles, their auto insurance might look more like an extended warranty blended with cyber protection and roadside assistance. So where do insurers fit in? Insurers will need to shift from pricing based on driver history to underwriting based on technology reliability, vehicle maintenance logs, software versioning, and environmental risk data. That opens the door for new roles in data science, product development, and engineering risk, and new types of partnerships between insurers and tech companies. But there are challenges. Legal frameworks aren't fully built yet. Regulators are still trying to figure out how to assign fault in crashes involving AI. And insurers must figure out how to collect enough reliable claims data when autonomous vehicles are still relatively rare. Add to that the complexity of cybersecurity risks. A hacked vehicle could be both a safety and insurance nightmare. In the long term, though, the industry sees opportunity. Fewer accidents, lower severity, more predictable risk, and insurers who embrace technology, AI integration, and real-time data analysis will be the ones leading the market. So what will insurance look like in a fully autonomous world? Less about the driver and more about the design. It will be driven by software, shaped by product liability, and supported by real-time data and predictive analytics. And for students or professionals thinking about insurance careers, this is your chance to shape the future. Whether in claims, underwriting, product innovation, or tech integration, there's a role for you in building this new world. If you found this breakdown helpful, hit like, subscribe to Insert Knowledge, and comment below. Would you ride in a fully autonomous car? Let's talk risk innovation and what comes next in insurance.